After 1 month's reprieve, the Reserve Bank of Australia is back on the interest rate hike cycle, raising interest rates by another 25 basis points to take the cash rate from 3.6% to 3.85%. This is the 11th interest rate hike coming off the post-COVID lows in 2022. So will this latest hike cause a housing smackdown? Or will the Australian housing market remain unkillable just like John Wick? I'm Biko Konstantinos, and that's what we're going to talk about today. Nearly all economists were expecting the RBA to pause interest rates for the second month in a row. However, just like sticking your finger in an electrical socket, they got shocked. I don't know why though. Australia's inflation rate's one of the highest among developed nations, and our interest rates are one of the lowest. I didn't get shocked though, because I'm an economic guru. I learnt my economics like every other expert on the back of a cereal packet. But seriously, if you're after some high quality content from a Greek Australian who's slightly balding, please subscribe to my channel, and why don't you crack this video a like? It's up there with cracking a coldie. And stick around because I'm going to go through the multiple factors that are currently affecting the housing price, and at the end I'll be giving my personal view for the Australian housing market. So what did that naughty RBA do? Just raise bloody interest rates? After the media and everyone seemed to be howling at them to stop raising rates? Well, my friends, you can't have it every which way. Nobody complained before COVID when the RBA kept the cash rate around 2% even though there was no real need. And nobody complained after COVID when interest rates were reduced to zero and kept there for 12 months, giving mortgage holders a cash bonanza of extra savings and artificially inflating the value of all properties up to 30 to 40%. So while Phil Lowe acknowledges that inflation is past its peak, the current CPI of 7% is still far too high, which is why the board decided to increase rates again. So where to for interest rates going forward? According to the RBA, some further tightening of monetary policy may be required to ensure that inflation returns to the target range in a reasonable time frame. And after saying they'll be watching things closely, the board states that they will do what is necessary to achieve their inflation target. So what does all that actually mean for interest rates? Well, to me, it sounds like we're close to the end of the interest rate hiking cycle, but there could potentially be further hikes ahead. And at this stage, with Australia's inflation around 7%, I think there's more probability of rises rather than cuts. Now, ever since the RBA first started hiking rates, Australian house prices started dropping sharply, with this green line showing the 5 largest city aggregate. But as you can see over the past few months, house prices have stabilized and actually started rising. So the question now, especially with this latest rate rise, is will house prices keep rising or will they turn downward and resume their downtrend? So house prices up or house prices down. So I'm going to go through all the factors putting downward pressure on house prices, and then I'll look at some of the factors actually creating buying demand, so we have all the information for our conclusion. First off, borrowing capacity has been absolutely smashed. So the amount people are able to borrow from when interest rates were at all-time lows has now been reduced by over 30%, which means if you previously were able to borrow 1 million when interest rates were at their lowest and all your circumstances are still the same, you'll now only be able to borrow around $700,000 or even less. So that is a massive reduction in the amount people are able to borrow. And this is one of the biggest factors that could result in further house price declines, because many home buyers just won't be able to offer the price that sellers are asking. And when that happens, sellers normally have to reduce their price to a level that buyers can afford. You see, banks don't just lend on the current mortgage rate, they put a buffer of 3% onto the current rates to assess whether you'll still be able to afford the mortgage if mortgage rates rise another 3%. So because interest rates have been risen so fast, borrowing capacity has really been destroyed. Next, we have the mother of all shocks for household balance sheets when thousands of fixed home loan rates convert from their current 2% fixed rate to a new variable rate over 6%. So with 1 in 4 mortgages having to convert from fixed to variable in in 2023, it's going to be a monumental shock to many people with high mortgages. And guess what? Nearly everyone who's bought recently pretty much has to have a high mortgage. Why? Because our house prices are bloody expensive, man. Now, based on RBA modeling, at current interest rates, around 15% of all Australian borrowers will have negative cash flow. This means that their mortgage payments plus essential living expenses will be higher than their household disposable income. So that means that around 15% of all borrowers could start having to eat into their savings. And the RBA predicts that some of these borrowers might deplete all their savings sometime in 2024. So this is very sobering considering our interest rates aren't even that high compared to our historical averages, yet it's going to result in a lot of financial pain for those borrowers with large mortgages. So if interest rates remain elevated for a period of time, we could start to see an increase in forced selling for those who just can't continue making the payments. And even a small increase in forced selling could put downward pressure on house prices. Or will they get a smackdown? Recently, the volume of new houses listed for sale has decreased quite a bit below average, and many believe this has been one of the major reasons for the recent house price strength. Because if you have a pool of buyers all competing for a small amount of stock, that increased demand tends to keep house prices higher. As you can see by this graph, the national monthly volume of new listings really started to deteriorate in late 2022 and actually dropped lower than any time since 2008. So if listings return back to around their average, that could ease some of the buying demand, which could result in further downward pressure on house prices. Australia's heading for a recession. These ultra sharp interest rates have really put massive strain on a lot of businesses, and every week we hear news of a new business or company collapsing. So as companies face much higher expenses, their profits reduce, and that usually results in increased layoffs, and when people lose their jobs they tend to spend a lot less, and that can then feed on itself as we enter into a full-blown recession. So if economic growth starts really tanking, even if the RBA reduces interest rates, it may not be enough to save house prices. And when we think about the global economy, there's so much stuff going on now. We've seen a number of large banks collapse. We've still got a war happening. We've got multiple countries trying to get away from using the US dollar for trading. And we've still got very high core inflation across most developed countries. To me, that doesn't sound very rosy for the global economy. In other words, the global economy could actually turn to crap. Now, another thing that could put downward pressure on house prices is the current rental crisis. This crisis is getting so bad that we're seeing more and more protests and stories in the media. Now, all of this is just putting pressure on the government to take some action to try and improve housing affordability for Australians. Recently, the Greens have blocked the government's Housing Future Fund and have said to gain their support, they're calling for a 2-year freeze on rents and direct building of 225,000 public properties over the decade. Now, the Greens are proposing to pay for this by phasing out negative gearing and abolishing the capital gains tax discount. Now, if we did see some changes in housing policies like the Greens are proposing, that would actually decrease demand for housing in Australia. Because like I've said in many of my videos, Australia has some of the most generous tax deductions for property owners in the entire world. And guess what? Our house prices are some of the most expensive in the entire world. So any change to those policies, or even a new added policy like freezing rent prices for 2 years, could definitely put additional downward pressure on house prices. Alright, now what could actually keep house prices strong in the light of this latest rate hike? Well, like I mentioned before, if sales listings remain low, that equals extra demand. But you would think in time that listings would return back to their normal levels. Next, we've got record immigration levels. The government seems to be pursuing an immigration on steroids type policy with record migration numbers, fast tracking visas and citizenships. So this supersized immigration immigration is happening at the worst time with the current rental crisis, with many renters being priced out of their current homes and not being able to find other places to live. So when your population is increasing massively and only a relatively small amount of properties are being built, you end up with increased demand for property. And this could be one of the major reasons we've seen strength in house prices, even though borrowing capacity has been destroyed. Next, we've got Sweetener type schemes designed to help first home buyers. Now, for as long as I can remember, there's always been a first home buyer type scheme, and the latest one seems to be called the First Home Guarantee, where you only need a 5% deposit and the Australian government can guarantee up to 15% of the property value. So instead of actually trying to improve housing affordability, which would then allow more people to buy a home, the government keeps trying to push these first home buyer schemes, and guess what? With more people taking advantage of them, creates more and more demand, which ends up lifting house prices, making housing even more unaffordable. I mean, come on, Australia. I'm not so much against these schemes, but how about actually trying to address the root problem of why our house prices are so bloody expensive? On top of this, we've got an entire country obsessed with housing because house prices have risen way faster than wages for so many years now, and that just creates extra demand by itself. Add into the mix renters getting totally screwed over that they basically might do anything to be able to purchase their own home. So with all that going on, what will house prices do in Australia? My personal view is that they'll start falling again. I feel that the super sharp interest rate hikes and so many fixed rate mortgages having to revert to a variable rate above 6% will put massive pressure on borrowers with very large mortgages. And with Australia having the highest core inflation among developed nations, I don't see the RBA being able to cut interest rates in the near term. Add to this, I feel that the government is going to have to take some action to try to ease the housing crisis, and that action has a strong potential to reduce demand for housing, especially if it's something like freezing rents or changing negative gearing. So I just feel that the downward pressure outweighs the buying demand, and so because of that, with the current information I know, I'm expecting another 5% decline in house prices nationally. So with the current 10% fall from the peak, that would take it to a 15% fall. Now I personally feel that house prices really should fall more than that, but the record immigration levels may prevent that from happening. But hey, that's just my prediction. As we know, anything can happen in the market, but one thing's for sure, it's gonna be a bumpy ride. I'm Biko Konstantinos.